Hey guys, this is Simon with TRADEnPERFORM Coaching, and in tonight's video, I'm just going to do a trade review of the trap trade as it sets up. Now, so the objective of this, first of all, before I get into that, if you would like to reach out, if you'd like to check out the room, ask for a 5-day pass, just email me, TRADEnPERFORM@gmail.com. There's no charge for the pass; it's on me. The room does cost if you want to become a member, but there's no cost for visiting the room. So the whole point or objective to this is simply so that when I'm trading, I can think as little as possible. And then the other part of it is if I get someone who's new in the room or trying to help someone get consistency, I can teach them the trade, and the trade should hopefully, if everything goes right, work over and over. Not necessarily in one day, right? So there can be down days. That's a normal part of doing business. It's not a miracle. It's a process, right? But today's a good example because we were in such a hard trend day down, and people are like, how can you go long on a trend day down? And then I also want to talk about why don't you go short. So at the end of the video, I'm going to go through and give the short setups. I just simply prefer to be long. It's easier. It's easier to keep people consistent and get them to consistent profitability, and that's what I care about, right? It's not an ego thing. It's not I'm right versus you're wrong. So a couple things. First of all, we don't start trading in the room until 9 o'clock. You're welcome to if you'd like to. I don't like to. So here's roughly 9 a.m. And you can see that we had econ come out. So if you look at this realistically, no one's going to trade till it finally slows down over here at 9:04, 9:05. So even though there were trades that set up in here, and they were profitable, I don't think anyone would have taken them in the room. I certainly didn't. It was a really big flurry right after that econ came out. And so I'm just going to skip that, and I'm going to skip right to 9:05, right? And then the next thing I want to do is give the parameters for the setup. So what we are looking for is an algo to print on one of these bars, and we call those bars apex bars. So this is an apex bar right here. They also occur on the upside. That's an upside apex. That's a downside apex, right? And what I want is I want that apex to get stopped out. It doesn't matter how many bars close out, whether it just wicks underneath or it's a consistent, close under, as long as it closes, as long as the bar that closes back in is a 1 bar close back into this. If it's a 2 bar close back in, then the trade's negated and we don't do anything with that. Okay. So that would be right there would be your first trade of the day at 9:12 a.m. Pretty sure we took that. And I don't remember every trade we took. I'm trading in QNES the whole day. I was 100% on my ES trades today. They just all paid. Your entry on this trade, we have what's called a range bar predictor. We know where this bar will close, so you know ahead of time. Like if I know the bar is going to close at 38.73, I know the 73.75. The bottom of that bar is 38.73.25. I know ahead of time that the bar will close back in, and I'll put a buy stop in on that trade. My stop always goes about a point underneath here, so there's usually a 5-point stop. Let's just call it 70 for quick math. And the best this trade could have done before coming back and stopping out would have been 38.79.50, which is roughly a 6-point trade, which is, in my book, that's great, right? So trade 1, 7 points. As a matter of fact, I kind of just want to jot this down so I can just go through what the trade count was on the day in ES. So give me just a second to grab my pen, and I will do that here. I just bought some new pens, so I should have it. I almost never use a pen for anything but journaling now. So, well, at any rate, I don't have it. We'll just go with trade 1, right? So let's roll over to trade 2. This is trade 2 right here. You can see it gets stopped out. I'm just going to go right down the line, right? So I already know it entered. The entry is about the same at 73.75 for the entry. It stopped it out, closed back in 1 bar. The best I could have done on that trade, on that rotation up there into 922, would have been 38.84. So I just want to be clear. That's a 10-point trade, roughly 9-point trade, 10-point trade, right out of the gate, right? It's 9:30. I've made 6 points on one and 10 points on the other. That's $800 per contract, maximum favorable excursion, right? I'm not saying everyone gets the maximum favorable excursion. As a matter of fact, I can tell you, I usually scale at 3 and 4 points on the first part of the trade. I don't care. I just know that the trade goes to profit a lot. If I can figure out that the market's going to move higher, that's great. If I can't, that's great too. I really don't have a care about this. Let me erase all these profiles that I have. Those are for different trades. I'm going to erase the lines here real quick. And what you will see here, this is the apex. So you can see this bar got stopped out. That's a stop right there at 9:49 a.m. Let's just call it -5, right? So I made 6, I made 10, and I've lost 5 on this trade, unless I just scaled out really super quick. So I'm not a big fan of that. The entry on this would have been 66 and a quarter. I mean, I usually want at least 3 points. So maybe I did, but I'm pretty sure. I know I may not have just taken this trade for some reason, but because I was 100% on my trades, and I primarily trade NQ, so ES usually comes as a secondary thought process. But the whole point isn't to amplify or de-amplify anything. It's just to go, hey, the trade didn't work. That's that. No big deal. It's a stop, right? It's not the end of your day. It's nothing horrible. As we continue to look, as we scroll over, so there's no possible trade here because it just doesn't trap, right? This is a potential candidate. Again, it doesn't trap. This is another potential candidate. It just doesn't trap, right? You have to have the trade set up in such a way that it actually triggers, right? So as you come across to the right over here, if you erase these lines, right here, you'll see this bar becomes your next trap. Your entry would have been, let's just call it 56. Your stop's probably 51. Oh, less on this one, 52 on the stop on that one. So 4 points of risk. And the best you could have done on that, right? That was today. The best you could have done on that would have been 80, right? So 55 to 80 is about 25 points. 56 to 80, 25 points, right? So that's, let's see, 1,000. Let's see, 30. Well, let me go through the math here. I'm tired. So let's see. If I enter 55, if I exited 80, 60, 20,000, about $1,100, right? That's not bad, right? I understand that it's not miracle money, but it's not bad, right? And that to me is really, really, really important. So just good stuff, right? As we come back down over here to the right, over lunch, again, you'll start to. So, and by the way, when I can identify this trade, guys in the room, and I know I'm tired, so please forgive me for kind of going back and forth here. But when the best trade here would have been actually for this to clear the power bar, guys. So I know members in the room are going to watch it, so I just want to let them know this would have set up a supernova, right? So you got the trap here, over here, and if it could have pushed and closed above and come back, and we could have trapped on that bar right there back in for the push up, or done the POC trade. Members in the room will know what that is. That would have set up that supernova, and that would have been perfect, right? So you can see just in this small sample how I could have gone through the course of the day trading ES. So far I have one stop and everything else is a win, right? This would end up being, and I'm going to go a little bit quicker here. This is the next trap right here. Again, you can see I would have gotten my 3 or 4 point scale at least. Next trap occurs right here. Again, you would have gotten your 3 or 4 points as you're in New York lunch. Here's your next trap right over here. Again, you clearly got paid. That's 5 or 10 points. 5 to 10 points right there. You're at 1241. Here's your next trade. Right over here, again, you got paid. You can see once we got into this low, just shorts kept stuffing themselves over and over. So while I'm going through this, I want to be real clear on a couple of pieces, right? The first piece I want to be very, very clear about. The trade sets up over and over. It's not just one day. Secondly, these are all long trades on a trend day down, right? And the trades worked beautifully. And then as you'll see, as you go through the course of the day here, right, here's your next trap right there. I don't think any of this trap. That's your next trap. And then you get another trap. Right, oh, this is Asia. Sorry. Forgive me. So at any rate, long story short, that's where we're at right now, right? So you can see people who tried to, I went way past, I guess I lost track of the end of the day there. But as you can see, as you can see, the opportunity, it can be and is quite significant. And really, that's all I have to add to that. I think that it's a I think that it'll be a very, very interesting, very, very interesting trading day. Oh, I promised y'all some shorts. So here, I'll show you the traps on shorts. I don't like shorts, and I'm going to tell you the reason why I don't like shorts right now. We are trading 38.73 right now, which is where ES is. Interesting. I did not realize that ES did not get kicked to the curb like NQ did at the end of the day. I find that just extremely extremely interesting. That's exactly the words I would use on that. Extremely interesting. So just want to go back and show a couple of the traps on the shorts. I don't like shorts, and this is the reason why. I find that my short stops occur at about a 50% higher rate than the number of long stops that I get. Okay, and I'm going to show you why. This is the reason why right here. See how originally, and you have very little of this. See how this bar trapped on this bar, it would have technically gone to profit, but then it snaps right back against you. It's the snap back. And not only is it the snap back, but also this move that we get coming out of or into New York lunch, right? Where it just drives like this, right? Where it just goes and goes and goes with no counter rotation. This is where two things drove or drive my decision to trade in this fashion or to trade in this way. The first one was I became hyper responsive to the shorts psychologically, just caught between this kind of dichotomy between trying to push the shorts and always being leery of them coming back. Well, so kind of here's the cool thing about longs, right? When you get them to trap, they tend to just keep grinding up, even on trend day down, right? They tend to just keep grinding up, and that's what the appeal is for me, is that constant grind, right? So that being said, I said I would show you all the shorts. Here they are. A couple of them did set up. So let's just go to 9 a.m. I believe this is a trap right here. If you wanted to short, yeah, that's your first trap to the downside. This was technically a trap at 9 o'clock, but again, there was econ going on, so no one would have taken it. That would have been trade two. And on trend day down, the traps are obviously going to work better than they would otherwise. Right here's your next trap, right? Obviously, so for the short side on trend day down, there is money to be made on the short side. I'm still not a fan of it because the problem is I don't leave it the next day, and quite often the one day trend day downs will be a 1 day wonder. But you can see all of these hit for big rotations. There's the next trap. Let's see if we got another trap to the downside. Here's technically the next trap right here. All right, see how that came all the way back. Anyways, I'm not a big fan. Here's your next trap right here. That one I'm going to say lost your money, right? And I don't think this trapped on anything. Actually, let's see the bottom of this. No trap here to the short side at 12 o'clock. No trap to the short side to this trap. And no trap. I didn't have an apex up here to trap back into. There's just no algo there to trap back into for the short side trade. And that's it. So I'd have been 100% on the short side on ES2 if I decided to short. I prefer the longs. I don't get triggered by the longs. I can sit in the longs and they can grind up in my favor, and I like that. And the funny thing about that whole thing is no matter how bearish you say it is, right, the reality is if you look at this day, right, there was no way to get long short at the top. You had to be short in front of the 9 a.m. econ, which was supposed to be more important than the 8:45 econ, right? First thing. Secondly, it left me shorting while I was down in the hole. Generally, a bad idea. Even on trend day down, it will exist. It will stretch. Additionally, the longs offered me the opportunity as the market was pushing down into support. It constantly, you'll see this constant counter rotation, right? Take out lows, swing back up, take out lows, swing back up, take out lows, swing back up, constant. But let me tell you, when you're shorting, right, you can get this grind. And I'm going to give you a great example of that this morning. I was kind of looking at the market this morning, and I was like, maybe it is short. We're right up into resistance, right? And look how many times you could have shorted this morning trying to grab this extension. You could have started at 3 a.m., been completely right, and this whole area, this whole channel was just stop after stop after stop until the market finally opened. So at any rate, I hope y'all all made money no matter what you did. My only objective is to get my members in my room, my coaching clients, those are mentoring, consistently profitable. And you only need 2 or 3 good trades a day to do that. And we have the methods to do that. And the most unique thing about our room is that every single trade has a preset, predetermined stop. We know exactly where the entry is going to be. We know exactly how much we'll lose if we're wrong. And we know what the potential targets and extensions should be. And I think that's unique to most trading rooms. We're not sitting there trying to predict what the whole market will do. We just want the trade from point A to point B to point C and get out and go for the next setup. Anyways, my name is Simon. I'm a Trade and Perform Coaching. I'm going to bed, guys. Y'all have a great night. I'll see y'all tomorrow.